if you are retired or thinking about retirement, there are some options in the new CARES Act that could benefit you. We're going to break those down today. Stick with us. Welcome back. Chad Smith here, Mike Eklund. Today we're diving into the CARES Act and taking a deeper dive into the retirement provisions in the Act. We had one episode on the CARES Act, particularly around the stimulus checks, but that was right after it was passed. So let's dive into a couple of the provisions that we have now in this plan. The first one is the $100,000 withdrawal that you can make for if you're a qualified individual. We'll break down what a qualified individual is. But basically, this gives you relief. You can avoid the 10% penalty on a normal withdrawal from an IRA. You have the option to repay it and not pay tax on it. And that can be over 3 years. You can spread it over 3 years. So it gives you a lot of flexibility there. You can pay some in the first year, some in the second year, third year. You can wait all up to the third year. So you have a planning opportunity to take advantage of there. And then if you're in a couple, you each can take $100,000. So that's an opportunity. And this is particularly for people that are struggling, right? Maybe business owners or other things. Mike, you have an example there.
Yeah, no, this is a great opportunity for if anyone has reduced hours, reduced pay, been laid off, furloughed. It's a great opportunity to be able to pull money from retirement accounts at much better terms in terms of taxes and penalties than what was before. So, for example, let's say you are a restaurant worker and you've been laid off. Now you can pull money from up to $100,000 from your retirement account to help pay for your ongoing living needs in the interim. And as Chad mentioned, if down the road you get back a new job and you get the money back, you can actually pay those funds back into your retirement accounts over the next 3 years. So a lot of flexibility. It's just one of the options for those that need funds here in the short term. Especially those, for example, small business owners might be helpful for them as well.
Now let's break down that qualified individual, because that's an important component to this, right?
Yeah, that's the next question. So yes, it's great. I can withdraw $100,000, but am I qualified? So they've done a good job of saying who is qualified. First thing I'll say is you do need to self-certify yourself. So, but they do have items of the requirement. So number one is if you tested positive for COVID-19 or SARS-CoV-2 by a test, that would be the first thing. If you've had a spouse that's been diagnosed, or if you've experienced adverse financial consequences. So that's being quarantined, furloughed, laid off, unable to work due to childcare issues, and obviously if you're a business owner, closing or reduced pay. Obviously, easy examples with that. Once again, restaurant workers, owners, dentists, anyone that's working in that type of service type field. So really, yes, you certified if you had a job or income issue. No, you don't qualify if just because portfolio is down 15 or 20%.
Yes, an important caveat there. And then the next area you have is required minimum distributions and the relaxing on that option. So normally you are required, if you are retired, to take a distribution or a withdrawal from your IRA or your 401k. In this scenario, they're trying to prevent people from having to do that if their account values are down. If they're invested in risky things, those account values are down, and they don't want to make people have to take money out when values are lower. Now, a couple big parts of this: traditional IRAs, 401ks, 457 plans, 403bs, SEP IRAs, inherited IRAs, all fall under this, right? So it's a big area there that you do not have to take the required minimum distribution if you don't need it. However, if you still want to take it, and if you're in a low tax bracket, that's an option for you. And then you could convert it to a Roth IRA, which in normal years, you can't do that with the required minimum distribution. So that could be an option for you to take advantage of. And then the other area to watch for is the time period. February 1st to May 15th of 2020, you could pay back your RMD if you already took it, right? So this law was passed March 30th. So that's something to look at in your personal situation there. It could be an option for you to pay it back if you didn't need it and you don't want to pay the tax there. Be aware of that one-time rollover. There's a rule there that you can only do one-time IRA to IRA transfers in the last 12 months. So be aware of that and ask a financial professional about that or read into that a little bit if you are thinking about taking this option or using this option.
Yeah, no, those are good points, Chad. I mean, it's really, this is where the tax planning opportunities are set up. If you're listening to this and you're thinking, well, this is great, but I'm doing okay financially, I don't need to the 100,000 withdrawal, but I'm expected to take an RMD and I don't need to take the RMD. This is where, as Chad mentioned, Roth conversions, if you're in a low enough tax bracket, as well as capital gains at 0%, as well as if you're maybe in a high tax bracket and every year required to take the inherited RMD, this is a year where you wouldn't have to take that. So there are a lot of opportunities with the RMD waiver for 2020.
Yes, so those are some options that you have there. Thanks for checking us out today. Mike, you look like you are in a much more peaceful location than I at this moment. I like where you're sitting out there. It looks enjoyable.
It's very relaxing. It's a relaxing day to talk about CARES Act withdrawals.
Yeah, there is some positives to this. If you're not dealing with the health concerns, which we hope you're not, we know some are, and we hope you're all staying safe, but it's a nice way to have some good weather to spend outside and enjoy it. And if you want to watch our other videos, you can subscribe so you don't miss the next episode, or you can check out other videos that we've done previously. Thanks for joining us.